A warm welcome to each of you. We are delighted to have you us for this special session on the Integrated Business Solutions paper organized by Board of Studies Academic. This session is designed to provide you with deeper insights into one of the most dynamic and application oriented paper at CA final level. To enrich your learning experience, we invite experienced chartered accountants with multidisciplinary experience who bring practical perspectives from diverse domains such as audit, finance, taxation, law, and strategy. Their insights help bridge the gap between academic knowledge and real world decision making, which is at the heart of IBS paper. Now, imagine a major production house planning to co produce a high budget featured film with an international studio and release it on global OTT platform. At first look, this may appear to be a creative or strategic business venture. However, this single decision activates a chain of implication across multiple disciplines. From a regulatory standpoint, such a joint venture may require approvals under FEMA and adherence to FDI norms, specifically if foreign funds are routed for content creation, licensing, or distribution. In terms of financial reporting, the production house must comply with Ind AS 38 intangible assets to recognize costs related to script acquisition, music rights, and software tools for digital production. If filming equipment is taken on lease, then Ind AS 116 becomes applicable, ensuring right of use of assets and lease liabilities are properly disclosed. Revenue from OTT licensing or satellite rights must be recognized as per Ind AS 115 based on the transfer of control and fulfillment of performance obligations. On the direct tax front, the applicability of Rule 9A, which deals with deduction of production cost and guidance under CBDT Circular 16 2015, must be considered. Tax planning also includes evaluating tax on cross border payments, remuneration to actors and technicians, and exploring eligible deductions under Income Tax Act. The indirect tax implication can be equally important while exhibition may be taxed at a high rate, certain post-production services or OTT licensing arrangement may attract GST at different rates. From finance lens, this project involves significant capital allocation, spanning pre-production, location, scouting, technology integration, digital VFX, and global marketing. The company must explore optimal financing, whether through equity tie-ups, term loans, or external commercial borrowings. This invite compliance under RBI guidelines and careful monitoring of currency risk. Okay. Uh, the audit and assurance perspective may include verification of revenue contract confirmation procedure from digital distributors and compliance under SA 210 in case of re-engagement, etc. For a listed entertainment company, SEBI LODR regulation is very important. Okay. In short, what appears to be a straightforward creative decision, a film production actually involves multidisciplinary thinking where one must align financial prudence, regulatory compliance, tax planning, legal structuring, strategic intent, and operational control. In our previous sessions, we explored case studies from different sectors. Today's film industry example is another reminder that in real life decisions are rarely limited to a single subject. They demand an integrated, solution oriented mindset, exactly what the IBS papers aims to inspire. Today, we bring you an interesting case study from the Case Study Digest Volume 2. Here, I am pleased to inform you that Volume 2 of the Case Study Digest has just been released. The edition features a range of real life industry relevant case studies carefully curated to enhance your understanding and application of multidisciplinary concepts. I encourage you to go through the material thoroughly. Your feedback and suggestions are most welcome and will help us continue improving these resources for your benefit. Do you know the Indian film sector is a vibrant and influential part of the country's economy, culture, producing the highest number of films globally across multiple languages and types, where increasing international collaborations, digital distribution platforms, and rising investments. The industry has evolved into a structured and professionally managed sector. However, it still presents unique challenges in terms of finance, risk management, compliances, and valuation, particularly due to reliance on intangible assets, project based funding, and unpredictable revenue streams. In this context, the case study Rahul and Raj Films was especially chosen to reflect real world industry specific complexities that professionals may encounter in practice. It integrates the key concepts across multiple disciplines. For example, SA 210 is relevant for determining whether a fresh audit engagement letter is required each year, especially important in film production houses with fluctuating operations. The use of positive confirmation request and external confirmation procedure aligns with audit evidence gathering, particularly around revenue recognition, vendor balances, and intellectual property rights. The case also brings in legal compliance, including Section 14911 of the Companies Act, which limits the tenure of independent director, a common concern in professionally run production companies. From a taxation perspective, CBDT Circular number 16 clarifies Rule 9A, which deals with the tax treatment of film production and distribution, a subject often need better understanding. Further, students are required to apply value chain analysis, examining both primary activities and secondary activities. The inclusion of Ind AS 38 highlights the needs to understand accounting for intangible assets like film scripts, copyrights, and musical rights. By working through this case, students are encouraged to integrate their knowledge of financial reporting, auditing, taxation, law, multidisciplinary perspective. It is also important to understand integration. All case study materials are available on students portal. I encourage you to go through them thoroughly before and after the session. Today's session will be interactive, so please feel free to ask your questions whether in Hindi or in English. Additionally, the last 15 minutes of the session will be reserved for general questions which may not be directly related to today's case study. Today's session feature our eminent speaker CA Nilanjan Paul sir, a seasoned chartered accountant with over 17 years of experience across a wide spectrum of accounting and auditing matters. Sir brings with him extensive expertise in evaluating complex and judgment intensive issues such as going concern assessments and non compliance with law and regulations, a strong presence as a speaker on prestigious platforms, in deep involvement in addressing emerging issues in financial reporting under the Companies Act and the SEBI listing regulations, rich experience in managing capital market transactions and advising on related compliance requirement. We are sincerely thankful to Nilanjan Paul sir for accepting our invitation and sparing his valuable time during this demanding audit season. His insights and practical perspective will be immensely enriching for all of you, especially as you prepare for IBS paper and beyond. With that, let us begin today's session and explore this insightful business case. CA Nilanjan Paul sir, over to you.
Thank you, Deepak, and uh, good evening, everyone. I uh, thank ICAI and especially Deepak for having me in this forum for one more time. I could see a couple of known names, and it is great to have them again in one place where we are able to interact. I would recommend that this session is interactive. This session is for you, and Deepak had specifically requested that if I can also add certain practical insights, which I'm sure I'll be able to do some justice. But overall, we'll be spending 3 hours together, and I would request all of you to make this 3 hours very meaningful. Ask as many questions as you want as far as related to this particular topics that we're going to cover. And you have, I think, access to the chat box. So please feel free to write your questions, your clarifications that you need, however basic or however complex it might be. I'll try my level best to answer those questions. I think Deepak gave a very beautiful summary of what we're going to talk about. Generally, we talk about manufacturing setup, an entity who is in healthcare or maybe in some auto. But I think I felt the topic which ICA has chosen today is very unique and something which I'm sure we all have experienced some way or the other. I would assume that, like me, everybody would like to have uh, would watch movies. Yeah, and Tanishk, we are going to talk about movies today. How a movie business function, how complex or how similar that industry is, and how does it fits into overall in the financial reporting and taxation framework. In addition to that, we have also another interesting topic, which is about a platform which deals with the hospitality kind of services. So again, two very unique and very different and very closely experienced sectors that we are going to talk about, right? Uh, we will be having a few questions around that, right? We will talk about how an auditing or an accounting topic looks like in those particular scenarios. And as I said, I would recommend all of you to continue to ask questions, right? So with this, I will be sharing my screen, and yes, you should be able to see it in some time. Yep. I hope the screen is visible. If yes, can I have a thumbs up? Tanishk, you wanted to ask some questions? I could see your hands up, Tanishk. Okay. Okay. So let's start. As Deepak mentioned, we'll talk about this fictional entity called Rahul and Raj. This entity is in the business of movies, right? I belong to the old school, so I'm still not used to OTT or Netflix kind of a environment because movie experience is completely different, right? So, how many, I don't know, to what extent you agree to what I said, but let's assume that we're talking about this entity called Rahul and Raj, who has been in the sector since year 1995, and they have made beautiful movies who have captivated audience for a long time. Now, this entity is led by Shah Ratan Kumar and two other prominent individuals. Rani Kapoor and Nutan Dubey. They have churned out movies for over a period of time. The entity is known for its pioneering approach towards movie production. They have a very special appreciation from the audience, and they have also casted very good narratives over over various mediums of movie industry. As required under the laws and regulation of India, there is a board of directors who professionally manages this entity. And board of directors, individual persons come from a different background. They are really richly experienced in this particular field, and they provide wonderful opportunities for the management to interact and share their strategies with the management. The board is also prudent. They have a very strong oversight mechanism. They have a risk management framework, and they adhere to highest level of corporate governance. Now, one of the important factors, and these are the few facts I would like you to note when we look at certain questions, is that in the current year, 24-25, the entity has continued to thrive across various sectors, medium screens, large screens, and they are very well appreciated by the audience. As compared to the year before, they have increased their revenue by 76%, right? From 337 crores from the previous year to 593 crores in the current year. Similarly, the cost of production has also increased from 327 crores in the previous year to 511 crores in the current year. A very significant milestone for the entity is that they have crossed 1,000 hours of content milestones. Right. So again, if I have to share, this is a very important milestone which a movie making industry monitor how many hours of content that they have. If I have to give you some more deep dive, they don't sell goods. They sell time. Actually, they make sure that the time an individual spends watching movies or experiencing in a particular theater, that experience they sell. So for the entity perspective, crossing 1,000 hour of content is a very big milestone. Uh, but another concern which the entity is also facing is that there is an EBITDA loss, though it has come down, but there is still a EBITDA loss, right? The company is also trying to have a very strong collection mechanism. They are trying to reduce outstanding, and you have seen that they have reduced from 164 days outstanding to 160 days. So overall, in the movie making business, they are trying to grow. There have been significant improvements, but at EBITDA level, they are still at a loss. So EBITDA is a measure for measuring performance. So if I have to expand what EBITDA is earnings before interest, depreciation, tax, and amortization. So if I have to look at how to compute, I'll start with my profit before tax, and I will make the adjustments for interest, for taxes, and amortization. I will add them back, right? So I will reach a certain number, and that number in the terms of financial reporting is a very important measure, and that is known as EBITDA, EBITDA. Yeah. So let's move. We have a fancy name, Rahul and Raj. The name of the audit firm is much more fancier. So Ranveer and Ranveer are the auditors of the entity, and they have been in this entity for the last 4 years. They have been associated for 4 years. They have they have experience in media and telecommunication businesses, and they are known for delivering exceptional quality and innovative solutions with a very highly motivated team of professionals who possess sectoral knowledge and have in-depth industry experience. They also have experience in doing great quality audits. and they ensure that the work that they do, or the value that comes from association of Ranveer and Ranbir as an statutory auditor is quite immense. Uh, the firm is very well known in the country, and they are one of the very marquee names as far as the audit firm is concerned. Now, this is where I want all of you to pay more attention. We're talking about the audit of the year March 25. And as we know, under these standards on auditing, I have to ensure and I have to do procedures to ensure that I want to continuously engage the client. So one such important engagement factor is to enter into an engagement letter. So when the Ranveer and Ranveer LLP, these statutory auditors, were assessing the client continuance, they said that for March 25 we would evaluate whether we need to have a new engagement letter. So engagement letter, just for everybody's clarification, is a set of document which the auditor as well as the auditee both will sign, and they will lay down the terms and conditions of the engagement, right? So now the terms and conditions generally is a reiteration of the roles and responsibilities under the Companies Act 2013, which spells out what are the roles of the auditors, what are the responsibility of the management, and what is it of the if there are any safeguards, is there any fee condition, if there is a milestone, all those terms and conditions would be entered into and agreed between both these parties. So let's assume for the year March 25, they were planning to to enter into an engagement letter. Now, what the auditor felt is that I am I am kind of repeating a same document which I have signed last year. So they are trying to evaluate whether they should enter into an engagement letter again for March 25. Now, one important criteria which I would like all of you to note, that as far as the management is concerned, right, there had been some changes, right? Uh, there had been some changes in the management side. So they were evaluating, do I need to enter into a new engagement letter for the year March 25, or is it appropriate under the standards of auditing for me to not sign a new engagement letter for March 25, but can continue with the engagement letter that we have signed off last year? Okay, let's see the questions. So that's the first question we thought we'll put across for all of you to discuss. And the question is that should the auditor send an engagement letter again for the current year? So as you could see on the screen, there are four options that we have put across. One of the option is right, and I would like you to put your responses on the chat box, or if you want to talk about it, speak. You can unmute yourself and you can put down your point of view. So the first option is that the new engagement letter should be sent because there is a change of senior management. Okay. Option two, it should be sent, right? Because under the Companies Act 2013, it mandates you to enter into an engagement letter every year. So that's option two. Let's see what the option three is. Option three is that it is optional to enter into a new engagement letter every year for a recurring audit. So under Companies Act 2013, an auditor is appointed for for a term of 5 years, and he or she can be appointed for two terms of 5 years. So I have anyway a fixed kind of appointment. There had been no change in the laws and regulation. So one point of view is that the standards on auditing 210 gives an option for recurring engagements whether to enter into a new engagement letter or not. Now, the other option is uh, that the Companies Act again mandates auditors to obtain engagement letter for each and every audit, be it recurring engagement or be it any engagement, you have to have a mandatory engagement letter. So I invite your response. What would that be, right? So is there is there a response that you guys have? If yes, if you could put it down in the chat box or unmute yourself and respond. Maybe we'll wait for a minute or two for to get your responses. So any thoughts, anyone? So what do you think is the correct option out of these four options that we are seeing on the screen? SA 210, just for everybody's knowledge and clarification, SA 210 deals with the terms of audit engagement, and they tell you, or and they also illustrate what could be the possible items that should come in the engagement letter. Yeah. So I have the first response from Prashant. Prashant believes it is point A or option A. Okay. Any other thoughts, anyone? Okay. So, Prashant, you have to pick up. You felt that since there is a change of management, you should enter into an engagement letter again. So, do you believe that is it because it is better to clarify to the management what are my terms of engagement, since the person who will be signing this time are different as compared to one who signed, or do you believe that there are some other reasons?
No, this reason precisely.
Okay. Okay. So if I have to expand, if there had been no change in the management, Prashant, then probably I would not have signed a new engagement letter, is it?
That was optional, in my view.
Okay. 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 So I think Prashant made a great point that since there is a change of management, it is necessary that I clarify my scope to the new set of management. What I wanted to draw a parallel is that even though it is a continuing engagement, I have a fixed appointment for two terms of 5 years each under the Companies Act. It is imperative that we have a very clear cut understanding is what my role is as an auditor and what is the ask from the auditor to the management. So I think Prashant made a very great and valid point that to have this clarity or from my terms and condition, the standards of auditing would mandate you to have a new engagement letter since the signing people are different. My management has changed entirely, right? So great response, Prashant. Yeah. So again, just to quote you from the literature, if you would go to para A29 of SA 210, it provides that the auditor decide to not to send unless there is a change of a management. So one of the example is if there is a recent change in the management. Yeah, great. Okay, so let's proceed further. Let's see a few more facts. What happened is that during the audit, the auditor observed that the days outstanding are significantly higher as compared to industry averages. So if you would see from 164 days, it came down to 160 days. But still, the auditors felt that they're way higher than the industry averages. And they felt that because of this, they should be obtaining independence balance confirmations for trade receivables. Now, the confirmation requests were sent uh, directly to the customers, right? Indicating whether the party agrees or disagrees with the information and provided in the requested trade confirmation. Now, as you would recall, they have been with they are auditing this entity in the last 3 or 4 years, and in their previous experience, they felt they have seen that the responses from balance confirmation were very less, and then they were required to do alternate procedures. So this is primarily because that the customers uh, work in a unorganized sector, and those entities may not have ready-made books of accounts or really updated books of account, and also generally there is a lack of interest by those customers to respond, and they are hence reluctant, right? So again, if I have to talk about confirmation request, we have a specific standard on auditing, which will talk about how you send confirmation request. Now, a very key feature for confirmation is that you obtain independent confirmations. So when I say independent confirmation, in an audit, you would normally use the information which is produced by the entity. For example, a company will have its ledgers, it will have its books of account, it will have its invoices. It is a document that has been generated within or by the company, right? So, what the standards on auditing uh, envisage or advocate is that if an auditor is obtaining an independent confirmation, that is, which is outside the framework, or which is outside the premise of the management, then the quality of that evidence is higher, right? So the auditing standards envisages or puts great reliance on information which is obtained independently, which is not directed or monitored by the management. Under the standards of auditing as well, the auditor is supposed to monitor the entire confirmation process. They have to directly send out those confirmations or emails or through posts or through any other medium directly to the customer. Yeah. But again, in this scenario, the auditor felt that the information that they get or the response rate is very low. Okay, and they have requested the customer to respond directly to them, and whether they agree or disagree with this with the letter. So generally what happens in a audit, you would send out a letter to the customer that as of a particular date, this is the balance, do you agree or disagree? If you agree, then you say you agree. If you disagree, you say according to your books of accounts how much amount is payable, and that again forms a basis for a reconciliation between the management and the customer, right? A very important piece of evidence as far as the auditing is concerned. So let's see what are the questions. Now, what type of confirmation request has been designed by the auditor while auditing audit receivables? So there are responses on this slide. We have negative, we have positive, we have hybrid, we have blank confirmation request. So again, I will give you a minute to again look at, and I have a response from Prashant, but I will hold on for others to also read and then respond. Yeah. So what do you all think is the type of confirmation? I'm hoping you guys had the chance to go through the standards on auditing on confirmation, right? If not, then please let me know. Then I will elaborate further. So is it positive? Is it negative, hybrid, or blank confirmation? Yep. Shanti, you're right. It is SA505. Okay. Okay, Neha. I got your response. So Neha, if you have to choose between positive and hybrid, So for everybody, Neha responded that it could be either positive or hybrid. So Neha, if you have to choose, what is it that you have to choose? Because you have to choose only one option. It can't be both. Okay, let me. So we have Smriti, we have Jia, Pankaj, Akash, Neha, Nancy. Any response, Monica? I think the response is. Uh, I mean, you could gauge with the words that we have on the screen. We have negative, we have positive, we have hybrid, we have blank. Okay. So let's start on the reverse way. Is that a blank confirmation request? Let me ask. Is it a blank confirmation request? So it can't be blank, right? Because we gave an amount. We said that this is the amount, whether you agree or disagree, uh, is what they have to confirm. So blank is definitely ruled out. So now we have three. We have positive, we have negative, we have hybrid. So the way the standards on auditing works is that you ask for people to confirm what they have in their books of accounts, right? That is known as a positive confirmation request. You are positively asking the person to confirm a particular balance. Negative confirmation, on the other hand, is that I tell you that I am sending you this balance. I am giving you 15 days. If you don't respond to me within 15 days, I would assume that you agree to my balance. So your not responding to my requests is assumed to be an accepted balance. So I don't have a positive response or any response from them. I just assume that since you have not responded within the set time, you agree to this balance. That is known as a negative confirmation request. Hybrid is a combination of both. I don't think in the standards of auditing in India we have a concept of hybrid confirmation. So again, this option two from below is ruled out. So now it is either negative or positive. So as we discussed in the facts of the case, we have asked the customers to specifically confirm a balance. So then obviously I can't be asking for a negative confirmation request. I'm asking for the other person to positively respond and give us a balance. So in that case, right? Uh, in that case, uh, it is a positive confirmation request. It is not a negative confirmation request, right? And Prashant, you are right in your response to say that it is a positive confirmation request. So as far as the literature is concerned, the the auditor has designed a positive confirmation request because because it is asking the other party to positively comment, right? Either by indicating the confirming party's agreement, or by asking the confirming party to provide information. I think Prashant had a very interesting point of view is that negative confirmation is used where risk of material misstatement is low and chances of non-reply is low. So I think Prashant, that's a fair uh, perspective, and I think it is well acknowledged in the standards on auditing also, SA 505. But in my experience, the use of negative confirmation request is extremely rare. I don't even recall whether I have ever seen anyone using the negative confirmation option, generally you would expect the the confirming party to confirm to a particular balance and not to assume, right? So practically, it will be very unlikely that in your experience you'll have a negative confirmation option. What I also want you to remember is that if you are still using a negative confirmation request, the level of additional procedures that you have to perform would be very, very high because you're assuming a particular position, right? It is not backed up by a document, but you're just assuming. So, in that case, you will also need to uh, perform very heightened audit procedures, which will generally uh, have a great impact on the audit timing. So probably that could be another reason why I have not seen a negative confirmation request to be used quite commonly. Okay, so I think it's very, very rare. Okay, let's add few more facts. Now, what has happened is that the now let's talk about the music rights and revenue growth. So, as it happens in any Bollywood movie, music is a very important part of the motion picture as a whole. Now, as you know, we can sell music rights separately. So nowadays we have pre-launch, we have a music launch, and all those events. So even in this scenario, Rahul and Raj, they sell music rights separately, right? And that too at the production stage. So probably they would decide to whom they should be selling it to. Now, movie is important part, and it is also important role in marketing. And the companies also release this soundtrack prior to the theatrical release. So if there is a good music, then there is obviously a high chance of the movie uh, working better. Now, as far as the fee is concerned, they are generally given a fixed fee in perpetuity, right? Where a producer has a right to a future royalty after achievement of threshold sales by the music company. So let's say I sell the my music rights for 100 crores. It's a fixed amount that I have to pay to get a right to that uh, music soundtrack. Now, after I let's say have let's say 1,000 subscribers or 1,000 CDs that I would have sold, or 1,000 subscriptions. In addition to that, if there is, let's say, five more new subscribers or new CDs that I have sold, that would again add to an additional amount of royalty. So, what happened in our scenario is that on September 24, the company granted music rights to three of its upcoming movie called Gold, right? And received 3,000 lakhs at the date of signing of contract. So let's say on 1st September, I signed a contract to sell the music rights of my movie Gold, and I immediately got 3,000 lakhs rupees. Now, again, important fact for your consideration that the contract stipulates that proportionate amount shall be refunded in case of non-release of music of any of the three movies, right? The music rights are made available to the music company for the first film on December 24. Okay. Second film on 1st January 25 and third film on 1st of July 25. So 3,000 lakhs I have got for uh, for three upcoming movies. There is an entity called Gold who purchased these music rights for 3,000 lakhs. Now, these movies were released in three separate dates. The first was on 1st December 24, second was 1st Jan 25, and the third film was 1st of July 2025. Okay? So I would like all of you to keep this fact in mind. Now let's see the question. What should be the music fee revenue that I should recognize in 2024-25? So again, we have four options. We have 3,000 lakhs, we have 2,000 lakhs, we have 1,000 lakhs, and we have 593 lakhs. Okay. So, yeah, so I will take you back to the fact because this involves certain numbers. So, if I will again give a minute or two to all of you, if you could work and respond to that. Yeah. And I will urge others also to respond. Nancy, Akash, Pankaj, Vipul, Neha, Smriti, Jia, Monica. Right, we have a couple of people, and I would expect all of you to respond or put your response on the chat at least. Yeah, yeah, okay. So, what I would like you to all note is one of the movie, the third movie was was sold. The rights of music of the third movie was sold after the balance sheet date. So, though money for all the three movies were received before the balance sheet date, one of the condition is that I may have to refund the money if I don't release the movie on time. So, two movies were released during the year at different dates. The third movie was released after the year end. So, yeah. So till now, I have only two responses, one from Prashant and one from Mukesh. Anyone else would like to try their luck? Happy to wait. Okay, so let's go back to the question. Okay, so I think Mukesh and Prashant both responded to 1,000 lakhs, and that is the correct response. Let's see how this number will work out. That's how the number is, right? So I have three movies for which I sold rights. So per movie, it is 1,000 lakhs. Two of them were released before the year end. That was the critical condition in the contract. So I'm eligible to recognize revenue of 2,000 lakhs because I have sold those rights as of the end of the year. The third movie was made available after the year end of March 25. So the 1,000 lakhs will uh, be recognized in the financial statements of 25-26. Now, what I would also like you to note is that as far the accounting is concerned, under Ind AS 115, revenue is recognized when the control is passed. So as far as March 26 is concerned, right, the control has not yet been passed, right? So, so then obviously I could not have recognized revenue for this 1,000 lakhs in the year March 25. Is it clear? Or somebody wants me to elaborate? Or is there some confusion about revenue recognition? Do let me know on the chat box. Okay, let's move on to few more facts, right? Okay, now from accounting and auditing, let's talk about some corporate law. We're talking about an independent director called Sana Mukherjee. She is an independent director. She is an industry veteran with over 3 decades of experience in the movie and entertainment business. She is appointed as a CEO uh, uh, to drive transition into integrated media company across digital and broadcast medium. She's very experienced and well known in the movie fraternity. Now, her initial appointment was for 1 year and was then reappointed for another term of 5 years. Yeah. So, and that term would end on 30th of July 2025. The board proposes to appoint her for another term of 5 years. Now, another fact to be noted is that if the proposal is accepted, she will attain a 68 years of age on completion of a third term. So 1 year, she was appointed for 1 year. One time, that's the first time of her appointment. Second term was for 5 years. That was the second appointment, which is expected to expire on 30th of July 2025, just 3 months after my year end. On her expiry of appointment, 30th July 2025, the board is proposing to appoint her for another 5 years. Okay. Now, by 2030, which is by the end of her third term, she will attain 68 years of age. Yeah, facts are clear. Sana Mukherjee, independent director, appointed for 1 year, first appointment, second appointment for 5 years, ending on 30th July. Yeah, the board is proposing to appoint her for 5 more years. That's a fact in summary. Let's see what the question is. Now, the question is that can Sana Mukherjee be appointed for another term of 5 years? So, can she have a third appointment of 5 years, which will end in 2030? Yeah. So, we have another 4 options, and the text is lengthy as far as the options are concerned. And I would then give you some more time to read. Yeah. So first option is that under the Companies Act 2013, an independent directors can be appointed for a maximum period of 10 years. Okay. So option one, she can be reappointed as an independent director because she has 4 more years to go. So 1 year was the first time appointment, 5 years was the second term. She has 4 more years to go, and option one believes that there is a 10-year time. Let's move to option two, right? Option two is that an independent director has to be appointed as 2 terms of 5 years each. Okay. Again, in this option, she can be appointed as an independent director because her first time appointment 1 year is not for a period of 5 years. So I would exclude that 1 year from my computation. So my first 5 year term is the time when I have been appointed for 5 years. Right. So that's the first term. Companies Act permit 2 terms. So I am permitted to appoint Sana again for the second term of 5 years. So in this scenario, I will have the Sana Mukherjee would serve as an independent director for 11 years, right? So that is option two. Let's move to option three. Now, option three is that an independent director can be appointed for 2 terms of 5 years. Okay. And in this option, she cannot be appointed because she would attain 68 years of age. And any person who is attaining 68 years of age cannot be appointed as an independent director. Okay, so that's the third option. Third option is basically it is not because of my term, because but I will reach a 68 years of age, so I cannot be appointed. That's option three. Option four is that I should not be appointed as an independent director, Sana Mukherjee, because I have completed two terms. Now, every term doesn't mean that I have to be appointed for 5 years, right? So even in this option, I will count my first appointment of 1 year as one term, right? So since I have served one term of 1 year, I have served my second term of 5 years. I cannot be appointed for a third term because my Companies Act only permits two terms, right? With a maximum period of 10 years. So I want you to note the word maximum, right? So in this option, I cannot be appointed as an independent director, Sana Mukherjee. So I have only one response. So I would request all of you to always participate and let's hear what do you all think. I know it is a bit of a complex structure, but that's how complexity works. When you would all work as a professional, you would realize the level of complexity. So we're trying to give you a glimpse of that complexity through some case studies. So if you guys could give your response, then it will be great. Yeah. Okay, I have another. Uh, okay, so what do you all think? Tanishq, Smriti, I'm not hearing any response. Akash, Jia, Nancy, Monica, Vipul, Rachmali, Selva, Pankaj. Are we all clear about the facts, or do you want me to repeat the facts one more time? Okay, so the correct response is option four. So if I have to take you back to the requirements, you can see the requirements on the screen. So, an interesting point which I would like all of you to note, and this comes from a very fine reading of the section. The section 149 of the Companies Act 2013 requires appointment of an independent directors of two terms, maximum 5 years. So it is not that each term will be 5 years. Each term can even be less than 5 years. But I can be only be appointed for a consecutive period of two terms. So maximum I can serve a 10-year time period with a break of 5 years in between. So in whatever way I get appointed, I cannot be appointed for more than 10 years, right? So in this option, we were appointing Sana for 11 years. 1 year was her first, and one term of 5 years that she has served, and we are proposing for another term of 5 years. So total 11 years was her appointment. So that is prohibited under the Companies Act 2013, Section 149(11). What I would also like you to highlight is that there is a specific MCA clarification where they have said this particular point of view. They have clarified that an independent director can be appointed for a term less than 5 years. So that term, which is less than 5 years, is counted as one term. Okay. So in our example, Sana was appointed for 1 year in a first time appointment. So that is one term. Next, she was appointed for another term for 5 years. So she completed two terms, right? So in that sense, right, uh, she can't be appointed for the third time. Yeah, is this clear, or do you or does anybody want me to repeat? Any thoughts, anyone? Anything somebody wants to discuss? Some clarification, some confusion? Happy to happy to take care. Okay. Let's move to a different topic altogether, which is basically the strategic decision. Now, as it happens in life and as it happens in business also, not everything that you pursue uh, fructifies. So here also, Rahul and Raj were preparing or producing a movie called Kalin Bhaiya. Okay. Now the movie didn't work and they had to abandon the movie in between. Now, what was the reason for such abandonment? The reason was that the story was not meeting the desired standards. So they started working on the movie, but somehow within the movie direction, they felt that the story is not good. So they made multiple revisions to the story. They spent considerable efforts, were spent by the script writing team, but the narrative or the overall story didn't was not up to the standard or up to the expectation that they would have thought. There was a lack of compelling storyline, and it was difficult to move forward to the production. The team agreed that it is best to discontinue the project rather than investing further into a script that don't meet the creative expectations. So ultimately, even though if they would have worked, probably they felt that the movie would not have been liked by the audience. And so, in between the movie production, they said they felt that they will discontinue. Now, there's a question which I would like you to ask from the point of view of income taxes. So, in this scenario, when they have abandoned this movie, right, can this expenditure be claimed as a reduction under the Income Tax Act 1961? Okay, so again, we have four options. One is that movie can be claimed as a reduction, right? Because it is uh, uh, because it is a capital expenditure, it can be claimed. Second is that the cost of production of movie can be claimed as a reduction because this is a revenue expenditure. Third is that the reduction cannot be claimed because the movie was not certified for release. So any expenditure that you incur is like a non-deductible expenditure. Uh, the last option was that the cost can be claimed as the reduction because it didn't exceed the monetary limit value as prescribed under the income tax rule. So again, it is very sector specific and a very unique to the sector question. So I would jump directly to the answer, which is this. Okay. So this is basically option three, which is the response. There is a specific CBT circular which has clarified that a movie which is abandoned in between is not a capital expenditure. The cost of production of such abandoned movie is to be treated as a revenue expenditure and it is allowed as per the provisions of Income Tax Act. Okay. So what happens is that when you start producing a movie or directing a movie, you you would like to capitalize because you want to sell this movie in theaters. Now the question which came to the income tax department is that if the movie doesn't work or we believe that in between it is not feasible, and if I write that off, does it mean that I can claim an expenditure? Revenue expenditure. So I think which the income tax department has clarified that this can be claimed as an expenditure, right? Okay. Let's move to another fact pattern is about value chain. Okay. So they, as I said, is that they're focusing on quality, adaptability, and continuous to drive the success in the world of entertainment. Now they are trying to do a new project, and that project uh, is about women empowerment. Now the objective is to have a story which is very real, which everybody can relate to. It is accurate and it is an engaging content. This would also include examining the historical context, elements, data, and other fields. Collaboration as a matter of expert was required for its authenticity and other details. Now, what they also felt is that Rahul and Raj uh, are operating three or four movie theaters, right? One is Mangla Talkies, right? They have Sangam theaters and they have Pile theaters, and you can see they have kind of given the importance also. So Mangla Talkies uh, is the theater where 50% of the movies which they make are exhibited, right? But they have seen that it is falling. Their margin is falling. It's a low margin industry, so it has fallen from 14 to 13% of margin. As far as the Sangam industry is concerned, it is now an upcoming and a very young theater, because it also has very low cost of operations, and they also have newer kind of facilities. As far as Pile is movie is concerned, they have experiencing certain problems, and this is not a theater which they have incorporated, but it's a entity that they would have bought in the previous years. Uh, but they are having some revenue growth, but the profit is not rising that much. So they might have a good amount of revenue growth in Pile, but the profits are not rising. So again, that's a concern for the management. Last, they have an entity called Vijay Screens, right? This is a platform where they showcase their documentary movies or movies by the upcoming directors. This is a uh, very key to the entire portfolio of the entity. Now they have feedback, very good feedback from customers. One of the feedback we could see is that uh, uh, one of the customer Yusuf, they had a very good memory about the Sangam theater, right? As far as the competition is concerned, as we all would know, due to the rise of OTT and other platforms, they are facing a significant and stiff competition from this new movie making theme. So, and that is also cutting down their uh, market share, right? So again, they have these human resource people, Rani Kapoor, Nutan, who would work on various aspects of human resource. This is a question where we talk about value chain, right? And it might be difficult to uh, discuss this on a one-to-one basis. So I thought I'll just put this question and then I'll take you through my perspective of the over the value chain analysis. So the question, as you could see on the screen, is that you are supposed to re-evaluate the value chain of Rahul and Raj, focusing on production, acquisition, distribution, and exhibition of movies. We are also supposed to write down the operational challenges and how they affect the efficiency of overall success. So, as you said, Rahul and Raj, the positives that they have is that they're in movie business as well as distribution. It continues to focus on quality, which will help them to maintain a competitive edge. I think this is a very important and positive factor for them. Now, what are the other things as far as logistics, inbound logistics are concerned? Is that they are focused on planning, enabling efficient production and cost control. Again, a very key item as far as the value chain analysis is concerned. Now, as far as operations, they have Sangam and they have Mangla Talkies, and they've ensured that the production is smooth and great. Outbound logistics. Now they are seeing that as far as the challenges are concerned, they are seeing a declining performance because of various OTT and other platforms. Other two plus point is that they have marketing and sales. They have strong brand presence, and they also are thinking uh, of adopting digital marketing, which I think is quite relevant to boost their brand. Now, they have a very good customer feedback. So, brand acceptability and brand retention and brand loyalty perspective also, they have a very good recall value. So, for example, the feedback of Yusuf for Sangam Theatre is very well taken by the people. Now, support activities, right? Their effort to modernize the infrastructure has paid off, but there are certain regional kind of concerns. As far as human resource is concerned, the skilling of talent is vital, right? And they also upgrade and the units like Pile movies, which they bought and they had problem, that also needs to be evaluated and looked at very, very closely. Technology, right? They should be adopting technology on their digital medium, their digital platform in OTT platform should also be considered. So overall, what I felt is that Rahul and Raj has built a very strong and vertically integrated value chain. Now, to sustain growth, they must address the regional inefficiencies. For example, we spoke of Pile Theatre, modernized technology, OTT platforms. They also have to look at improving human resource strategy and optimize procurement. Right. So, yeah. So we have one more question to go. Yeah. So, so as I said, that they were trying to develop a women-centric platform. So one of the movies that they were developing is known as Simran. Okay, it is, as I said, is a theme of human or of women empowerment, right? So with this theme, let's move to the question. Okay, now the question is that whether the production of movie Simran is a research or a development stage under the relevant index. Okay. Uh, One of the important thing that I would like to highlight is that under index 38, you have two stages, research and development, research or development. Research is more like a exploratory phase where I have still not found out whether I should be continuing with a particular project or not. Development stage starts after I have finalized a particular idea and I want to invest resources and time because I believe that this project is going to take off. This logic or this standard is relevant not only for movie making, but for any intangible asset which an entity wants to capitalize under Ind AS, right? So, research, as I said, is a very early investigation or a knowledge gathering kind of exercise. It is a stage where people have not made up their mind. Now, as far as the movie production is concerned, right? They would involve ideation stage. They would look for new ideas. They will talk to new screenwriters. They would talk to common people, you and I, right? Where they will get our feedback. What is it that interests us? What is it that we are seeing or experiencing? Is there a good story, right? So it is more of a fact finding kind of exercise. So costs are still incurred during this phase, right? Because you have to finalize cast, you have to crew, or you have to finalize shoot date. So it is more of a planning kind of exercise. At this stage, which is still at an ideation stage, this, if I have to compare this with Index 38, will qualify as a research phase because I don't have a movie idea finalized, right? What will be the storyline? Who will be acting in these movies? Who are, the shooting dates? Where all will shoot? All those things. I still have an idea of of women empowerment, but how will the storyline look like? What will be this cast? The screenplay have not yet been finalized. So even in this particular case of Simran, casting, shooting dates have not yet been finalized. So this is not at a developing stage. Under Index 38, it is a research stage. So as far as the accounting is concerned, since it is a research stage, Index 38 would require you to write off, or sorry, will require you to recognize all these expenses in the statement of profit and loss. This cannot be capitalized as an intangible in progress because that can only happen if you are at a development stage. Since you are still at the ideation stage, starting stage, this cannot be capitalized. Yeah, I think this we spoke of. So we have another story or another case study. We can maybe take a break for around 10 minutes. It is 9:50 in my, sorry, 7:50 in my clock. We can come back in 10 more minutes, that is 8 p.m. But before we have a coffee break, I would ask all of you, is there some questioning, something that you guys want to discuss, something is unclear, do pause and do let me know. Yeah. Okay. So we can break for tea. I didn't have any feedback. Yeah. So we'll see you in 10 more minutes.
Yes, sir.
Okay. So, uh, like we had the first session or the first topic about movie making industry or a movie making entity, we have a new age digital platform fintech entity where they provide hospitality services. So I'm sure in our life we would have traveled to multiple places. We were familiar with this kind of an app. So we have an entity called India Dekho. It is a travel tech company, and they have transformed the digital travel landscape in India. They provide a wide array of services like hotel booking, flight reservation, holiday packages, and they are accessible through a proprietary app. Okay. Uh, Now they have focused heavily on innovation and customer experience, and they have leveraged technology to stay ahead in a highly competitive market. Now, as I said, it's a fintech and a technology based entity, and it is important for the entity to also have strong controls over the IT infrastructure. So, during the current year, the entity saw two major instances where they have lost significant amount of money. One of them was unauthorized payments, right? If you would look at the loss because of this unauthorized payment, the entity lost 5 crores in the current year. Now, the way it happened is that uh, India Dekho uh, used a intermediary called InstaPay, okay, who is to manage the gateway between the entity and the customer. So if I have to simply put, let's say if you have to buy a hotel uh, room for let's say 3 nights, you will go to a travel app, fill in your details, and click on payment. So now the moment you click on payment, in the background, what happens is that the app interacts with a service provider. That service provider manages the the transfer of money from the credit card or bank account of the customer to the entity. So we don't really see because this happens in the background. So again, that's something that you guys should know how this sector works. Now, in this particular example, India Dekho engaged InstaPay as the intermediary, and the employees of intermediary, which is InstaPay, they misused their access, and uh, they initiate suo moto initiated refunds of of certain bookings. So one hand, the company, which is India Dekho, refunded the money back to the customers, but they didn't seek refund back from the hotel or airline provider. So again, to put it simply, let's say I bought a flight ticket. I went to the app, InstaPay app. InstaPay app interacted with the India Dekho app. India Dekho app interacted with InstaPay, and money was debited from my account and it went to the account of the airline. Now, in between, InstaPay employees initiated refund. I got the refund of my flight bookings, but they didn't ask for a refund from the airline. So if I look at from the entity standpoint, it lost twice. Once it paid money to the airline, and they also paid money back to the customer. So in that case, the entity lost 5 crores, and there were 1,905 orders which was fraudulently cancelled by the third party service provider. Second, irregularity which they observed was the abuse of cancel payment feature in the India Dekho app. Now, when you initiate a transaction, the app provides a functionality that uh, you can cancel a payment within 48 hours. Okay, so there were many people who abused this particular feature. So even in this case, what happened? The entity, which is India Dekho, paid money to various service provider, for example, airline. But within the 48 hours, when the customers also requested for a refund, the entity also paid back money to the customer. So here also they lost around 33 crores, right? And the number of instances were 4,200 users who abused this facility. So in a net scenario, the entity observed two categories of misappropriation where the money was refunded back to the customer, but the refund was not claimed from the service provider. So the entity lost money. One in such category was 5 crores unauthorized payments, and the second one was abuse of cancel feature. Right. Another interesting thing that we should know from this sector is that they have very prominent celebrities doing their marketing, right? And since these celebrities have a very strong loyalty, a connection or interaction with the celebrities creates a very dominant feature uh, in the minds of the customers, right? So I thought I'll just put that context in front of you. Uh, Now, what happened is that for these two features, right, of unauthorized payments and um, abuse of cancellation feature, the the entity was obviously quite upset because they lost money. So they involved a forensic investigator to look at why this events have happened and they lost so much money. As far as the forensic investigation is concerned, this investigation was led by the former chief of CBI, and it was also handled by a reputed law firm. Now, forensic, as we all know, they will look at a detailed transaction analysis, they will interviews, they will make reviews, and they will look at management records. And when they did, they didn't find any collusion between the company and its employees, right? It appeared that it is more like a control lapse rather than a malified intent on any of the parties to have a fraud. So they didn't conclude it a fraud, right? Because they found no evidence. Uh, Now, few matters that we should all should know, and this will also be featuring as part of questions. Now, the auditor asked for the forensic report. Okay, the client said it's a very confidential document. I will not share the forensic report. Right. So the auditors were obviously quite concerned. Now, the auditors internally were also deliberating whether they would need to report these instances as fraud under Section 143(12) of the Companies Act. Mind you, one important aspect is that the category of frauds were more than a crore that requires to be reported. Again, these are sensitive information, and they are dealing with a sensitive information because they are auditors. Now, the management also requested him to emphasize on the need of a database that they should be maintaining. So again, two facts which I would all like you to note that the entity didn't provide the auditor with the forensic report. The auditor was deliberating whether they have to report fraud to the central government. And thirdly, the listed company also emphasized that they should be maintaining that the auditor should be maintaining a digital database to track the use of the uh, unpublished information, right? So let's see what are the questions. So these are the questions uh, that you can see on the screen. Now, the question is that is there a fraud under Section 143(12) of the Companies Act? Under Companies Act 2013, then auditor is supposed to report on frauds or suspected frauds that have been identified during the course of audit to the management, to the central government, if the frauds exceed 1 crore. So again, we have four options, and I would give you a minute to think and respond that in this scenario, do you believe that there is a fraud that the auditor should be reporting to the central government? So we have two yeses and two nos. So let me know through chat, or if you want to unmute and speak, what would be your response from these four options? So one option, as you can see on the screen, is that each fraud is less than 1 crore, right? So we have around 33 crores as the first one, and it has 4,200. And we have the another one was 5 crore, but the number of instances were 1,900. So numerically, it is less than 1 crore of individual fraud. Second option is yes, that we should be reporting because the officers and employees are not involved in the frauds. Third is that the frauds that the auditor should report all fraud to the central government, irrespective of materiality. So they should be reporting that. The other thing is that no, I should be reporting because a category of fraud exceeds the 1 crore threshold. So I would like you to respond and let me know what would be your response in this four option. Yeah. Selva, I didn't hear from you. Pankaj, Kachamali, Yashwant, Nancy. Okay. Any response, anyone? If the facts of the case are unclear, let me know. I can repeat those facts. Okay. So I have two responses, one from Pankaj and one from Prashant, and both of them believe that it is option D. So Pankaj, if you could explain why do you think that the auditor should not be reporting frauds? Because each fraud, or rather they should be reporting fraud because the aggregate loss exceeds qualifying threshold of 1 crore. Yeah. What do you think, Pankaj, that you should be reporting? Why do you think so? Pankaj? Okay. So let me ask the other participant. Prashant, you also said it is D, right? Can you please elaborate?
No, sir. I had read somewhere that over 1 crore fraud has to be reported. That
So
is why I.
is it individual fraud, Prashant? Because if I have to do a calculation, I have 33 crores divided by uh, 4,000 cases, and then I have 5 crores divided by 1,900. So will it be more than so? Will it be more than a crore individual fraud? I don't think so, right?
Correct, sir. I didn't think that way.
Yeah, yeah. So let's see what is the answer. So I think more than a crore, and that I will come to that also of individual frauds. I think the main requirement or one of the part of the reporting responsibility is that the fraud should be committed by employees or officers of the company. In this case, the first instance, right? If I have to go back, sorry, if I have to go back to the facts, the unauthorized payments, they were not initiated by the employees of the entity. They were initiated by the employees of an intermediary or a third party service provider. So employees of the entity were not involved. So then that is ruled out. Secondly, you have an abuse of cancel payment feature. There also, it was abused by the customers. It was not abused by the employees. So again, these are not frauds which are committed by the officers or employees of the company, which is a requirement under section 143.12. And hence, the reporting requirement doesn't trigger. Now, if let's say they would have been committed by employees, right? Then possibly this would have been triggered. Because Prashant, when I look at individual frauds, I will try to look at a category of fraud. I will not look at individual instance of fraud. So if I divide 5 crores by 1905, then obviously the amount will come down, right? But what I'm trying to tell you is that you would have to look at a category of fraud. And if that category of fraud is less than a crore, then you don't need to report fraud to the central government. So in this case, a category one, which is unauthorized payments, is more than 5 crores. The category two was again more than 1 crore because it is 33 crores. So the main reason for us not to report is because these frauds are not committed by employees or officers of the company, which is a prerequisite under section 143.12 of the Companies Act. Okay. So it is not because of 1 crore or something. It is because they're outside the ambit of section 143.12. Yeah. So this is the technical literature. If you refer to 143.12, it requires the auditor to report a fraud that involves or expected to involve individually an amount less than a crore. So a category of fraud, if it is less than a crore, then you are not supposed to be reporting. Yeah. And again, it has to be committed by employees. So if since it is not committed by employees, reporting under 143.12 is not triggered. Okay. Let's come to the second question, where I said that the company emphasized the importance of structured digital database, right? Uh, Now, this comes from the SEBI insider trading regulations or PIT regulations, preventions of insider trading regulations. Now, uh, the company secretary insisted that under the insider trading regulations, the auditors qualify as fiduciaries, right? Wherein they are supposed to maintain a structured digital database for them to record the transactions or the person or the name of the person or their PAN number who would be sharing, who would be handling a detailed price sensitive information. So again, the question is that do you agree that the auditor should be maintaining that database? So again, we have four options that yes, they should maintain because the SEBI insider trading norms requires the auditor to maintain a database in the prescribed format. Second option is no, they don't apply to the auditors. So hence the auditors are not required to maintain. Third is that under the Companies Act 2013, the statutory auditors are given an unrestricted right to access any information, right? So in that case, since it is a legal requirement, you have a legal right to access books of accounts, then you don't need to maintain uh, a database. Fourth is that the requirement of a digital database itself doesn't arise because the SEBI regulation doesn't require so. So we have four options. Let's see what are the responses. I'll again maybe wait a minute or so for your responses. So what does everyone think? Shant, Silva, Rajmali, Nancy. Okay, so let's see what is the response. The response is yes. The first option, that even the auditors under the SEBI insider trading regulation, they have to maintain a structured digital database, right? Again, if I have to give you some more technical background, this is there on the screen. So auditors, professional firms such as auditors, accountancy firm, they are required, they assist or advise listed entities, and they are considered as fiduciaries. So if you go to chapter 4, regulation 9, sub-regulation 2, the auditors are covered as fiduciaries. And hence they are supposed to maintain the structured digital database. Now, what would be the content of the database that is also prescribed under the SEBI insider trading norms? If you would see, you are supposed to maintain the nature of UPSI or unpublished price sensitive information, name of the person who has shared the information, and name of such person to whom it is shared along with the PAN number. Yeah. So again, a very rigorous or onerous requirement for the auditors. Practically, if you would look at the SEBI clarifications also, this database has to be maintained digitally. It can't be a manual database, right? And again, they would have to be looked at in a very, very strict way. There has to be proper controls so that there is a control around maintaining a digital footprint. Who has changed the information, who has not changed the information, that data has to be there. And most importantly, this data has to be maintained in-house and this cannot be outsourced. Yeah. So again, a onerous requirement for the auditor to maintain a list of information when they are using the data of a listed client. Okay. Now let's talk about the question that is there on the screen. This is a question where the auditor has asked for the forensic report and the entity has denied giving the forensic report. Okay. The management says that it is a confidential and this cannot be given. So in the legal fraternity, there's a term called client attorney privilege, which means that when you involve a lawyer, the entity will give certain confidential information to that lawyer. The lawyer will give you a report, right? Since there is a confidential information, they would restrict anybody, including the management, to share this report to a third person unless they get the consent from the management and also from the lawyers. This is known as client attorney privilege as far as the legal fraternity is concerned. So now the question is that if the entity is citing this privilege, is it appropriate for the management to do so? Can the entity restrict the management, the auditor from accessing this critical piece of information, which is the forensic report? Again, we have four options. The first is no. The auditor should be provided a copy of forensic report since the amount is material to the financial statements. The second option is that the auditor should not be provided because it contains sensitive information. Third option is that the auditor should be provided a copy of the forensic report since the amount is material from the financial statement preparer perspective. Right? So the management believes that the amount is material and hence the auditor should be provided. Last option, right? That the Companies Act permits unrestricted access to the books of accounts of the company. So any client attorney privilege cannot override the requirements of the Companies Act. So in this scenario, the entity should be providing access to the uh, auditor. So let me know in the chat box what is the response you believe is appropriate. Is it option B? Is it option A, B, C, or D? Any idea, anyone? Any thoughts? Pankaj, Prashant, Nancy, Selva. Do you think the auditor should be given access to the forensic report? Okay. So Pankaj believes that the auditor should not be provided because it is sensitive and the auditors can misuse. Okay. A member of the audit team can misuse. Okay. Any other thoughts, anyone? Okay. So let's see what is the correct response. Sorry, the correct response is option D. Okay. Both the standards on auditing and the Companies Act 2013, they provide unrestricted access to the auditors on any information. So I want you to appreciate the power that an auditor has. They can access any information that they want, which is required for the purpose of audit. There is no private agreement between two parties that can restrict the information. So I think that's a very, very big enabling factor for an auditor to conduct an independent and highly effective audit because the law of the land gives them a legal right to access any information. Okay. So as long as it is relevant for the financial statements audit, right, nobody can stop the auditor from getting an access. Okay. So if you would look at from a requirement perspective, that is where is there on the screen. So even a very common feature in an agreement, the client attorney privilege, it cannot prevent access to the forensic report. If this is a access problem, then this will amount to a scope limitation. And if there is a scope limitation, then possibly there would be a modification in the audit report. So the auditor can then not give a clean opinion, but they have to draw some attention to the fact that there has been a scope limitation and the audit opinion is not clear. So that's a fantastic right and a fantastic power which the auditor enjoys under the Companies Act 2013. Let's move to the next question. Now, there were unauthorized payment, right? Should this be reported under CARO 2020? So under CARO, there is a specific clause which requires the auditor to report on frauds, right? That has been noticed during the year. So now the question is that in one hand, we are talking about the fact that there is no reporting required under section 143.12, right? Because it is not committed by employees. What about the auditor's reporting under CARO 2020? Will he report or will he not report? And what are the reasons for that? So I have two yeses and two nos. So A, which is yes, it says that that CARO envisages auditors to comment on outcome of any forensic report, right? So auditor is then duty bound to report in CARO. Second is that CARO 2020 envisages the auditor to comment on fraud which came to force during his audit. So any fraud, it doesn't have to be limited to fraud that is reported under 143.12 to the central government, but any fraud which the auditor would have seen should be reported. And I also have two no's. One is that since you're not reporting under 143.12, reporting under CARO 2020 is also not triggered, right? Another reason for no is that you are not reporting under 143.12 and the amount is also not material from an auditor standpoint. So there are two reasons because you have not reported and also the amount is not material. So again, I would solicit your views. Out of these four options, what is the option you think is the correct option? Again, I'll request all of you, Arpit, Nancy, Prashant, Pankaj. Okay. So Pankaj believes that it is the first option that CARO requires auditor to comment on every forensic audit. So Pankaj, if I have to flip the question, that if there is no forensic audit, but if still there is a fraud, right? Then will we not report because there is no forensic audit? Is that what you think? So let's say there is a theft of cash. It is very clear that somebody from stores has stolen some cash. Okay. So if you think that it should be reported, but every fraud may not be investigated through a forensics expert, right? Because something could be very, very obvious. So if that is the case and there is no forensic report, then do you think that your option A would still hold good? Yeah. Okay. So let's see what is the correct answer. The correct answer is option C, right? Because CARO envisages the auditor to comment on any fraud that they have come to their notice during audit. So unlike section 143.12, which deals with fraud by the employee exceeding more than a crore, this particular clause on Caro covers all frauds. Okay, so it is nothing to do with employees or officers. It is nothing to do with whether it is more than a crore or not. It is not linked with whether you have reported fraud to the central government or not. If there is a fraud and if it is material to the entity, materiality is where you apply the concept of auditing or the standards on auditing. If it is a material number and there is a fraud that the auditor has observed, it doesn't matter whether they have reported to central government or not, but the auditor is duty bound to report such fraud under CARO 2020. Okay, let's take a few more facts. So during the year, India therefore moved to a new office and they purchased some equipments. Oh, sorry, some furniture. Now I want you to note few dates because the transaction happened over multiple dates. One is that the invoice was issued on 15th of October. The GST rate was 18%. Delivery on installation happened on 18th of October, 3 days after 15th October. The GST rate on that day was 18%. Payment entry that was made in the books was on 19th October, 1 day after installation, which is, and on that date as well, the rate of GST was 18%. But the actual payment from my bank happened on 26th of October. And on that date, the GST rate changed. It changed to 28%. Now the questions are raised is whether on the date of the date of payment and the time of supply for GST purpose. Right? Let's see the question. What is the date of payment of modular furniture? And what is the date? What is the time or date of supply? We have four options, right? 19th, 15th, 26th, 15th, 19th October, 19th or 18th, 26th and 18th. So the question is, what is the date of payment and what is the date of supply? I'll take you back to the case, to the facts of the case, so that you are able to analyze this question properly. And I'll take a pause and then let me know what is the response. Date of payment and time of supply. Mind you, there are many dates, and on the last day when the payment was made, there was the GST rate had changed. So what is the response? What do you think is the correct answer? Again, Pankaj, Arpit, Silva, Nancy, Ritmali. Okay. Prashant believes that we should go to the options. Okay. So let's see the options. And Pankaj, it is 18th. But Pankaj, I'm asking for two separate dates. Arpit, it is option A. Okay. And Prashant, it is option B. Okay. So any other thoughts, anyone? Pankaj believes it is option C. Okay. Anyone for option D? No one? Okay. So let's see what is the correct answer. Option B is the correct option. Okay. And did anyone give option B as a response? I don't. Let me just check. Nope. Okay. So let's see what is the reason. This is the reason. If we would go to the GST Act, especially Section 14 of CGST Act, it is the date of receipt of payment that is the that is recognized as the date of payment. Date of payment is when you are crediting the money in the bank account. So in this case, it happened on 26th. Okay, the invoice, okay, has been issued prior to the date of change. So that is 15th of October. So I would suggest that you go back to Section 14 of CGST Act, which says that the date of receipt of payment shall be the date of credit in the bank account if such credit in the bank account is after 4 working days of change of the rate of tax. In our case, it happened after 4 days. Okay. Hence, the date of payment or is the date of credit, which is 26th of October. Now, again, Section 14A, subsection 2 of CGST Act provides that in case the goods or services have been supplied before the date of change of tax, then the invoice has been issued prior to the date. The time of supply will be the date of receipt of invoice. So it is 15th of October. So what you should note is that if the rate has changed and if you're paying after 4 days of change of tax rate, then the date of payment under the CGST rules will be the date of credit in the bank account. And in such a case, where the date of payment is 4 days after the date of change of the tax rate, the date of supply will be the date of issuance of invoice. Right? Is it clear? Any confusion, anyone? Okay. So I think we also talked about brand affinity. We also said that there are celebrities who are involved in marketing and furthering the brand of the entity. These celebrities they showcase the brand or the logo of the entity. They go into various cultural events and advertisement campaigns. Now, one of the important thing in the contract is that the sports celebrity is prohibited from playing from any other team and cannot leave the company without mutual agreement. So, unless the company agrees, they cannot just leave and can cancel the agreement suo moto. Right? Now, the question is that if that is the case, will this be capitalized as an intangible asset? So, let's say I pay an upfront money of 100 crores to a sports celebrity who will you know uh, do all the branding activity. Now, is it appropriate that this 1,000 crores can be recognized as an intangible, right? Because I would be getting uh, the brand or the marketing activity over a period of time. Okay. So, what do you think? Does this help in uh, capitalizing this amount paid as an intangible asset?
So which amount?
So if I have paid an amount of 1,000 crores in our example, to a sports celebrity to advertise on behalf of the entity. The agreement is for 5 years, and in the period of 5 years, the celebrity will attend various events. Now, the question is that this money that I have paid to the celebrity, can I say that it is an intangible asset? Yeah.
I think so, yes.
Okay. Why do you think so?
Since we will be deriving some benefit from the sports person's advertising.
So then, are we saying that any employment contract, let's say the India Dekho entity engages me as an employee, they pay some money to the consultant who has forwarded the CV. Will that money then be capitalized?
No.
While so how is it different from here? So what I would like to highlight is that generally employment contracts or these kind of a contracts are not capitalizable because you don't have control. So it is not whether you will get economic benefits. If you're engaging someone, then obviously you will get some economic benefits. But are you able to control that person? The answer is no, because that person can leave, right? Even in your contract, generally in the employment contracts, there is a notice period, and after which the entity can leave. You don't need to have a consent from the employer before you leave the entity. You will have a notice period. That's it. But however, unique in this particular scenario is that in this case, the celebrity is legally bound in the contract, right? They cannot leave unless the entity gives them their permission. So if there is a celebrity who is engaged by the entity to do marketing activity, he or she cannot leave unless the entity is okay or the entity permits that in writing. So they control the continuance of relationship through a legal agreement, right? So there is a legal right which the entity has. This gives them control on that celebrity. So I thought I'll give this example because this kind of contract might be very common when you are dealing with a high profile or a very uh, well-known individual, right? So generally, you might have some clauses which might restrict the sports celebrity to suo moto end or terminate a particular contract. If it does not, then they would have a legal right. The entity will have a legal right. In that case, whatever money we pay can be permitted to be capitalized under Ind AS 38. Is it clear, everyone? So can I have some thumbs up if people are clear on the chat, please?
So what is the answer then?
You can capitalize. I think it is there on the screen as well that in this particular scenario, since you have control, the amount can be capitalized. Yeah.
Yes.
Okay. Okay. Now, another question is that the India Dekho people would have developed some kind of a loyalty, or they would have generated some kind of goodwill because they have been in this market. They are very, very well known. Okay. So, and this fame or this public image that would have obviously incurred certain costs. For example, they would have trained people, they would have advertised, they would have done some startup kind of a activity. Now, this question is that whether these expenditure can also be capitalized, right? So, in this case, I would like to highlight is that the standard in days 38 specifically prohibit capitalizing expenditure on internally generated goodwill. Any expenditure that you use or that you incur for advertising and promotion activities or to enhance branding or to enhance customer relationships, they are linked with my day-to-day operations. They cannot, under the standards of accounting in days 38, can be capitalized. So I want to distinguish between an expenditure that you incur for carrying out day-to-day activities. So you might incur a cost to operate or to market, but that is more of a routine kind of a function that cannot be capitalized. Whereas if you're paying a money to acquire the services of a celebrity or acquire the services of a third person, if you have control, as we saw in the previous example, that can be capitalized. A routine kind of expenditure, let's say I create a brochure where I advertise the services of India. The printing of that brochure, the cost that you incur, that is an advertising activity. You don't capitalize, right? Because this is a routine expenditure which is incurred in your day-to-day operations. Okay. So in that case, the standard is pretty clear to say that these expenditure cannot be capitalized. Sorry.
No, sir. But since we paid the money, will we be? Since you said we can capitalize.
So I said, Pankaj, there are two sets of expenditure that we incurred. Okay, let me explain this better by way of an example. Let's say I am embarking on two separate marketing expenditure. One is I'm going to print my brochure, okay, and I will put it, let's say, a stall. I create a stall. I put those brochure. I hand over those brochure. Whoever would come and visit my stall. Let's say I incur 100 crores, right? The cost of printing of that brochure, which is 100 crores, that cannot be capitalized because that is a routine expenditure that you incur for your ongoing activity. Whereas, let's say I pay 100 crores and I say that, you're a sports celebrity, you're a cricketer. Why don't you wear my T-shirt, which has a India Dekho logo, and attend some celebrity event? You talk about in that event of how good the India Dekho app is, right? So I'm saying these are two different marketing expenditure. In this second example, I am engaging that particular person to give me certain activity. Okay, he may do marketing, he may do some many other things, right? So I am doing an activity not just to market my brand, but also to create visibility or also to create, a very different connection to people at large. That the standard permits you to capitalize if you control that agreement. So if you would recall, we had a specific clause in the agreement which said that the celebrity cannot leave, right? If there is unless the entity permits. So you control that person. You control how many events he will attend. You control when he will attend the event, right? So that's within your control. That is not just a advertising kind of a activity, but this is also an activity where you can engage or where you can enter into certain markets, or you can engage with certain customers whom you had not met earlier, right? So, for example, this sports celebrity will talk about in his particular group of people. So that will again give the entity a possibility of a new business. That may not directly be an advertising campaign, right? This just giving a feedback from one person to another. That since you have paid a lump sum money, you can control that agreement. You can capitalize that amount. But in this example of printing a brochure, that the standard doesn't envisage to be capitalized. So I thought I'll just distinguish between these two expenditures.
And then we can amortize.
Yeah. So if you capitalize the upfront money, you go to Ind AS 38, you find out the useful life, and then you amortize.
Straight line or WDV or unit of production method.
So I think the standard doesn't prescribe a particular method. It says that you have to find out in what manner you are getting those benefits. Intangible assets, Pankaj, I have not seen it to be through a unit of production, because that is, even in a unit of production, let's say it is zero, depreciation or amortization cannot be zero, right? So I have generally seen it to be a straight line, right? WDV is also not possible, because WDV is on the fact that as and when you use, your value deteriorates. So I'm not sure that if for an intangible the value can deteriorate as and way the day passes, right? I think these two methods that you mentioned, WDV and unit of production, are more prevalent in a manufacturing kind of entity where there is a physical loss of obsolescence of a particular item of plant and machinery. But for intangible, generally I have seen it to be a straight line method.
Okay.
Yeah. But again, as I said, the standard doesn't prescribe a particular method for uh, for uh, for amortization. Yeah. So okay. I think we discussed all this. Yes, I think we did discuss. So we have one question on TQM, but I think it will be too difficult for you guys to look at the TQM fact pattern. But I will just summarize, right? There had been discussions in the entity also to better their quality, and the meeting of their management is there on the slide. If you would look at what they have said, is that the managing director, they felt that they need to enhance their product. They aim to optimize their competitiveness in the market. There was a disagreement also with the independent director. The independent director felt that the quality should not be confined to manufacturing alone, but there should be other service lines that should also be corrected. So there was a kind of a heated argument between both of them, between the MD, between the CEO, between the chief accountant. Okay. Then obviously there was a consensus that is supposed to be reached, because unless you have a consensus, you will not be able to reach an particular answer. So let's see, as far as the TQM is concerned, you have 6 C's of TQM: commitment, culture, continuous improvement, cooperation, customer focus, and control. Right? What would you suggest? So that is the question for TQM. So I think it is a descriptive answer, and it is not appropriate for you to for me to ask for each and every response on this descriptive thing, but I thought I'll just highlight a couple of them. As far as the commitment is concerned, uh, there should be a strong commitment from leadership, right? Unless there is a strong commitment, you will not be able to uh, further the TQM. Another aspect which I would like you to note is that people believe, or and it is a misguided belief that TQM can only happen in a manufacturing kind of a setup. I think TQM is a management concept which looks at efficiencies and which looks at quality in general for the entire organization. So it doesn't matter whether it is a manufacturing entity or a service oriented entity, which like India therefore is a service oriented entity. So the principles of TQM apply equally to manufacturing as well as service. So we spoke of commitment. So one of the very important or a very easier way to demonstrate commitment is that there should be a policy which should say that all operations of the entity should strive for quality commitment. Second, there has to be a culture, right? Culture is not just policy making, but you also behave in a particular way. You show by your behavior how important the quality is. Your quality oriented behavior is very, very important, right? So to do that, there should be a regular training which should be embedded to enhance or make people aware the importance of quality. Third is continuous improvement. Uh, there should be a mindset that the company adopts a continuous improvement plan. They look for feedback, they look for suggestions, and they correct their policies and procedures based on these feedback. Cooperation. Each and every function of the entity are linked to each other, right? They are linked to the overall quality objective of the entity. So cross functional team working, right? It is not that people should be working in silos or they should just think about their own department. They should work collaboratively, and hence that will help them to cooperate with each other and then look for the quality of the entity overall. Customer focus, I don't think it could be emphasized more because customers are the users. If you're able to continuously engage with them, then you would be able to gain their attention and hence you will have a better quality. Lastly, control, right? Because you should have proper internal controls. As we saw in those two instances of unauthorized payments, right? Because of that, there were lapses in internal controls. So you should have proper audits. There should be control charts, performance reviews that will help you in maintaining control and over processes of the entity. So again, just to conclude, by embracing these 6 C's: commitment, culture, continuous improvement, cooperation, customer focus, and control, India therefore can enhance their service quality and strengthen customer relationships. Yeah. Okay. So I don't have anything else to cover, but if somebody has any questions, some clarifications about the topics that we spoke of, or some experience that they want to share, happy to hear.
So in the first case study,
Yeah.
there was a 115 question, and there was a clause that they could they had to repay the amount of the
Yeah.
third.
Yeah. Yeah. Yeah.
That clause was not there.
Sorry, if you're asking that if that clause was not there, then what we would have done, is it?
Yes, sir. And the payment was related to the third movie after the year.
Yeah, yeah, yeah. See, I think as far as India's 115 is concerned, it is not dependent on payment, right? It is dependent on whether you have control, right? That is the criteria that you use for revenue recognition. So in your question, Pankaj, that if I would have received the money after the year end, but I don't have a clause of a refund, okay, I would ask you a different question. I would ask you a question whether you have entered into an agreement. Do you have a legal right to enforce payment on that particular date? If you have that legal right to enforce payment, you might have received payment after the year end, right? But still, you would be eligible to recognize revenue. Okay, so that line that if you have to refund money, right? If the production is not happening, right? That line restricts the transfer of control, right? The control gets transferred when the movie is ultimately launched, right? So if that line would not have been there, Pankaj, then the transfer of control would have happened on the date of signing of agreement. And if you would have a legal right to enforce for payment, then obviously you could have recognized revenue. Yeah, am I clear?
Yes, sir. Thank you.
Okay. Any more question, anyone? Nancy, Selva, Prashant. Okay. So, Deepak, I don't have any more questions here. So I will hand it over back to you.
Okay. Sir, your clear and practical explanation of the case study rooted in the dynamic and creative context of the film and travel industry helped to understand how complex business decisions must be approached with a strategic, financial, legal, and regulatory lenses. Whether it was about applying Ind AS 38 for intangible assets or navigating GST implications and tax planning under Rule 9A, your analysis demonstrated how real world business challenges go far beyond technical knowledge. You have beautifully illustrated the integrated and multidisciplinary thinking that the integrated business solution paper is designed to develop. Thank you once again, sir, for your engaging session and for guiding through how professionals must approach evolving sectors like media and entertainment with accuracy, adaptability, and foresight.
Thank you, Deepak. Thank you for your
Students,
time, and I really thank yourself and ICI for this opportunity. I would also like to thank all the students and wish them all the best for their exams. All the best, everyone.
thank you, students, and please go ahead and raise your general queries. There is a query how is sketch making works in case study solving. Okay, first of all, you begin by sketching the business structure. Okay, first go to requirement part, then start reading your case study. Okay, then begin by sketching the business structure, key entities, relationship. This could include flowcharts, organizational charts, timeline, or process map. After this, identify key elements. When you start reading, you will identify key elements. Okay, use the sketch to break down the case into strategic areas such as finance, law, taxation, operation, and then try to connect dots. For example, how a tax issue affects FR or how a law impacts strategy. After this, clarify problem. Sketch helps pinpoint the central issue, risk, or decision points. You can visually mark conflicting zones. Okay, mapping alternatives or decision. Use decision use decision making and draw proper diagram to connect dots. Here, integration of concepts is very, very important. Now, a question always comes: why an index is crucial in open book exam? Okay, it saves your important time. In a time bound exam, searching through hundred of pages for a specific concept, provision, or standard waste your precious minutes. A well organized index allows you to instantly locate the right material, such as India's 115 revenue recognition. But you can go there only when you have developed a proper better index. Support It will also support your study. Open book exam don't test your ability to find information. Okay, it tests your ability to apply it. Having an index help you quickly move from concept to application without losing your chain of thought. Without an index, you may panic. Okay, in examination, you may panic to recall where a provision or rule is written. Okay, it also improves your answer quality and it also improves your confidence. But the best index is your conceptual understanding. Okay, index is important, but best index is your conceptual understanding. In an open book exam, you are allowed to access the material, books, notes, indexes. But what truly sets you apart is not how many resources you carry, but how well you understand the subject. Your subject understanding is very, very important. Just because a book is in front of you doesn't mean you will know what to look for or how to apply it. If your concepts are strong, you will instantly recall which standard, which section, or which model applies. You won't waste time by flipping pages. You will understand why something is relevant. Okay. For example, in the case study discussed by sir, knowing that rule 9A relates to film production, okay, it helps you to jump straight to that section or that page of your module. This question has been framed from your module. If you have read the module in a very clear and very logical manner, then you can straightforward go there and apply the concept very easily and you will secure good marks. Okay. Again, I am saying conceptual understanding builds confidence and which again builds your marks. Application requires interpretation, not lookup. Open book exams like IBS test not what you remember, but how you interpret and apply the material. Students, please go ahead and ask your queries.
Sir, can I ask one question?
Yes, yes.
Sir, please give some tips to prepare MCQs because there is a lack of time in the exam in answering, and also some of the answers are quite similar.
Hmm.
To to correctly pick up the right answer. for MCQs, what should be the best preparation?
Best preparation is your conceptual understanding. If you have good conceptual understanding, then you can easily crack every type of MCQs. For this, do practice, practice, and practice. If you do practice of a large number of MCQs, you can easily crack, and even you can easily identify the concept from which page of the module the concept or MCQs has been framed. Main thing is your conceptual understanding plus practice. If you have good practice, then you can easily crack each type of MCQ very easily. Try to attempt most likely type of MCQs, not type of MCQs, and try to attempt the MCQs having multiple options. Okay?
Yes, sir.
Students, please ask any other query. मैं यहाँ पे इसी क्वेरी को हिंदी मीडियम के स्टूडेंट्स के लिए भी यहाँ पे क्लियर करना चाहूंगा। ये एमसीक्यूज वाली जो क्वेरी है, तो इसमें देखिए क्या है कि अगर कोई भी आपका एमसीक्यू आता है, ठीक है, तो एमसीक्यू आप इजीली करेक्ट कर सकते हैं अगर आपको कॉन्सेप्चुअल अंडरस्टैंडिंग है। ठीक है, अभी आप देखेंगे कि एग्जाम में कई बार ऐसे एमसीक्यूज आते हैं नोट वाले, ठीक है, या एमसीक्यूज आते हैं रिलेशन वाले, या जिसमें मल्टीपल ऑप्शंस होता है। ठीक है, वो एमसीक्यू आप तभी करेक्ट कर सकते हैं कि अगर आपने सफिशिएंट एमसीक्यूज की प्रैक्टिस की होगी। प्रैक्टिस करने का मतलब ये है कि उसको सीरियसली प्रैक्टिस करना है। ठीक है, उसका मतलब ये नहीं है कि ऊपर ऊपर से ऑडिटिंग कर दिया। नॉर्मली स्टूडेंट्स क्या करते हैं कि ऊपर ऊपर से ऑडिटिंग करते हैं, कि ऊपर ऊपर से चेक करते हैं। नहीं, उसको सीरियसली एमसीक्यू को सॉल्व करना है और उसके कॉन्सेप्ट्स को अप्लाई करना है। देखना है कि कौन सा कॉन्सेप्ट उस एमसीक्यू में लग रहा है। कभी भी कोई केस स्टडी अगर आप अटेम्प्ट करेंगे तो एग्जामिनेशन के अंदर जब रिक्वायरमेंट पार्ट देखेंगे तो एमसीक्यूज भी आप देखेंगे, क्योंकि जब आपके माइंड के अंदर ये आ जाएगा कि इस केस स्टडी के अंदर क्या क्या पार्ट उन्होंने आपसे पूछा है, उसके बाद केस स्टडी को आप रीडिंग करना स्टार्ट करें। और जब आप उस केस स्टडी को रीडिंग करेंगे तो आपको पता लगना शुरू हो जाएगा कि एमसीक्यू की कनेक्टिविटी केस स्टडी में कहां से है और उसकी बैकग्राउंड में कॉन्सेप्चुअल क्लैरिटी कहां पे है। ठीक है, तो इसलिए कॉन्सेप्चुअल अंडरस्टैंडिंग बहुत जरूरी है। मैं बार बार एक ही एग्जांपल स्टूडेंट्स को बताता हूं कि लास्ट टू लास्ट एग्जाम के अंदर एक एक्सटर्नल हाँ ईसीबी का क्वेश्चन आया था लॉ का। तो वो क्वेश्चन अपने आप में बहुत अच्छा क्वेश्चन था। और वो कैसे अच्छा हुआ कि उस क्वेश्चन के अंदर जो था, मतलब नोट टाइप के जो सिचुएशंस थी वो भी दी हुई थी। तो अब सपोज इस तरीके का एमसीक्यू एग्जाम में आता है, तो क्या अगर मैंने उस कॉन्सेप्ट को पहले मॉड्यूल से पढ़ा हुआ है, ठीक है, अगर मैंने कॉन्सेप्ट को मॉड्यूल से पहले पढ़ा हुआ है तो मैं इजीली, पहली तो चीज है कि मैं उस जगह पे पहुंच जाऊंगा। ठीक है, अब मैंने क्या किया, मेरे को पता लग गया कि वो एमसीक्यू फेमा से था, फेमा के मैं उस पेज पे पहुंच गया क्योंकि मैंने पहले से पढ़ा हुआ था उस मॉड्यूल को। ठीक है, जब मैं पढ़ा तो उसके अंदर कंडीशंस दी हुई थी कि जो आपका जो लोन है, लोन के एडजस्टमेंट के लिए, वर्किंग कैपिटल यूटिलाइजेशन के लिए आप ईसीबी को किस लिए यूज करना चाहते हो। और उसमें ये था कि हैजिंग के बारे में और डेट ऑफ सेटलमेंट ऑफ फॉरेन ट्रांजेक्शन के बारे में 4 पॉइंट्स थे। ठीक है, अब वो जब आपने पहले पढ़ा हुआ है तो आप उसको इजीली वहां पे एमसी उसको अप्लाई कर सकते हो कॉन्सेप्ट को, ठीक है। अगर पढ़ा ही नहीं होगा तो आपको एग्जाम में बड़ी प्रॉब्लम आ जाएगी फिर इस सिचुएशन में, ठीक है। तो कॉन्सेप्चुअल क्लैरिटी का होना बहुत ज्यादा जरूरी है। स्टूडेंट्स, प्लीज आस्क योर क्वेरीज। स्टूडेंट्स, please ask, please go ahead and raise your queries. There is query IBS paper level expected in coming exam. Students, if you have strong conceptual clarity of various models, standards, legal provisions, core concepts, rule, regulations, you are well equipped to succeed in the exam with confidence. कैसा भी एग्जाम आए आप उसको क्रैक कर लोगे। फिर मैं वही कह रहा हूं कि कॉन्सेप्चुअल अंडरस्टैंडिंग होनी चाहिए, और वो भी मैं ये नहीं कह रहा कि बहुत डिटेल में होनी चाहिए, एटलीस्ट यू मस्ट हैव बेसिक कॉन्सेप्चुअल अंडरस्टैंडिंग। अगर एग्जाम में कोई भी कैसा भी क्वेश्चन आए, अगर आपको बेसिक कॉन्सेप्चुअल अंडरस्टैंडिंग है तो आप अपने रिसोर्सेज को यूज करके क्वेश्चन को क्रैक कर सकते हैं। लेकिन आपको पता होना चाहिए कि उस कॉन्सेप्ट के बैकग्राउंड में क्या है। इफ यू डोंट नो कॉन्सेप्ट देन यू won't be able to crack that MCQ or descriptive question. Okay. There is one more query. Some MCQs have very close answer choices. How do I pick the correct one? Very good question. Look for what the question, what the MCQ is truly asking. Okay. Here elimination works. Eliminate clearly incorrect option first. आप एमसीक्यू से जो इनकरेक्ट ऑप्शंस है उसको इलिमिनेट करना शुरू कर दें, ठीक है। यूज कीवर्ड्स फ्रॉम द क्वेश्चन एंड चेक विच इज मोस्ट एप्रोप्रिएट और मोस्ट लाइकली सॉल्यूशन, ठीक है। आप सबसे पहले जो इनकरेक्ट ऑप्शंस हैं उसको इलिमिनेट करें और जो मोस्ट लाइकली ऑप्शंस हैं उसको सेलेक्ट करें। यानी कि माइंड में रखें कि आपने इनकरेक्ट ऑप्शन को इलिमिनेट करना है। और अगर नोट वाला एमसीक्यू है तो उसमें क्या होगा कि आपको इलिमिनेट तो करना होगा, लेकिन किसको इलिमिनेट करना होगा वो आपको सिचुएशन के अकॉर्डिंग देखना होगा, लेकिन इलिमिनेशन आपको करना होगा, ठीक है। This MCQ is how do I ensure that my answer reflect strategic approach? Okay, whenever there is some strategy or strategic word, please think from long-term perspective. Consider long-term impact, stakeholder interest, not shareholders' interest, but stakeholders' interest. Okay. If you are asked whether to go ahead with merger, don't just look at financials. Assess synergies, tax structure, competition. Okay. Go beyond numbers. If a question is strategic, then go for long term and also go beyond numbers. आपको नंबर्स से आगे जाना है अगर स्ट्रेटेजिक कोई इशू केस स्टडी में टेस्ट होता है तो, और लॉन्ग टर्म सोचना है, खाली फिगर्स पे नहीं सोचना. लेकिन ये जो अप्रोच है ये किस लिए बता रहा हूं, सिर्फ स्ट्रेटेजिक पोर्शन के लिए बता रहा हूं. ठीक है. ये टैक्स वगैरह में टैक्स के जैसे नॉर्मल क्वेश्चन सॉल्व होते हैं वो वैसे ही होंगे. यू हैव टू सॉल्व योर टैक्सेशन और अदर कंप्लायंसेस क्वेश्चंस एज यूजुअल. But if a question is related with strategy, then you have to think from long-term perspective. If a question says evaluate, then evaluate. Evaluate means by giving proper pros or cons. एग्जाम में क्या होता है, एग्जाम का रिजल्ट क्या आता है, या तो स्टूडेंट पास होगा या फेल होगा. ठीक है. तो इसी तरीके से अगर आपको कोई इवेल्युएट करना है, कोई स्ट्रेटेजिक डिसीजन इवेल्युएट करना है, तो आप उसका प्रॉपर प्रोस दोगे, प्रॉपर कॉन्स दोगे, देन कंक्लूजन दोगे, तब आंसर दोगे. ठीक है. ये जो मैंने अभी बताया ये आपको सिर्फ स्ट्रेटेजिक पर्सपेक्टिव से बताया. ठीक है. और बाकी किसी सब्जेक्ट में आपने इसको अप्लाई नहीं करना कि लॉन्ग टर्म डिसीजन से हर जगह पे ही देखना शुरू कर दें आप. नहीं, उसको एज यूजुअल अप्रोच से ही सॉल्व करना है. ठीक है. ओके. Students, thank you for your active participation and your discussion. As we move forward, I encourage you all to continue exploring, questioning, and do practice. Conceptual understanding and practice is key for success in this paper. I am sure you will get good marks. But for this, again, you must have at least basic conceptual understanding. Wishing you the very best in your preparation, and once again, a sincere thank you to everyone for making today's session a success. Thank you, students. Thank you so much.
Thank you, sir.
Welcome. Yes.